Good morning, everyone. Thank you so much for joining us so early in the morning. Welcome to our last launch of the Bank Supervision Department annual report. Going forward, the Prudential Authority will release an annual report that covers our extended mandate. Just for your information, the restrooms are on your right. The first door is the women's restroom and the second one is the men's. In case of an emergency, there'll be 3 marshals right outside. The emergency exit is also to your right. If you can't see the 3 marshals, there will be signs pointing you towards the emergency exit. On our panel today is our Deputy Governor and CEO of the Prudential Authority, Kuben Naidu. Next to him is Denzel Boerstander, who's the Head of Financial Conglomerates, Supervision in the PA. Next to Denzel is Suzette Vogelsang, who's the Head of Banking, Insurance, and Financial Market Infrastructure Supervision. That is a very long title. And lastly is Faisal Gina, who's Head of Specialist Risk Support. Kuben will take us through the presentation, and then he will lead the Q&A. Thank you.
I didn't figure out this one. Good morning, everyone, and welcome to what's an annual event, the launch of the Bank Supervision Department's annual report. As Zama has said, this is the last Bank Supervision Department annual report. The report covers the period calendar year 2017, but from the 1st of April, the Prudential Authority was launched, and from next year, we will be presenting a report on the activities of the Prudential Authority. This report essentially covers the activities of the Bank Supervision Department, not the entire Reserve Bank, but much more narrowly on the Bank Supervision Department. I'm going to make a few opening remarks and then run through the presentation, and then we'll have questions and answers. Thank you for attending. It's good to see so many people here. I'm quite happy that we've moved the venue from the Reserve Bank branch in Johannesburg, which attracted an average of about 10 people. And I think this venue is much more conducive for people to get to. So thanks for that. 2017 was an eventful year in many respects for the Bank Supervision Department. There are many things that occupied our time. The implementation of Basel III and the recommendations of the Basel Committee was front and center in our activities. And ongoing supervision of the banks in relation to their compliance with Basel III and ongoing implementation of Basel III was certainly critically important. The second major development is that in August last year, the Financial Sector Regulations Act was signed by the President and came into law. The regulations were published earlier this year, and on the 1st of April, the Prudential Authority was launched. Let me give people a sense of the policy reasoning behind the establishment of the Prudential Authority. Even though it's not covered specifically in the report, I think it's important for people to get a sense of that. There's a sense globally that because financial sector companies are so integrated, it does not make sense to supervise a bank in one institution and an insurance company in another institution. Given the systemic interconnectedness of the financial sector, it makes sense to supervise them under one roof. In South Africa, this is particularly important because there's significant links between banks and insurance companies in South Africa. Nedbank, Old Mutual, Standard Bank, Liberty, Discovery now has both a banking license and an insurance business, and it's absolutely critical to look at these entities in under a single roof, looking at the way in which risks arise, and it is practically impossible to look at these issues separately. And so from a prudential perspective, safety and soundness has to be looked at holistically, and that's why we've implemented the Twin Peaks. The introduction of the financial markets infrastructure into the Prudential Authority is new for us. And clearly our job is to ensure safety and soundness from a prudential point of view there too. On the other side, there's growing international sense that, central banks are not great at market conduct regulation. Central banks are worried about profitability and capital adequacy of a bank, and as long as they're safe and sound, the central bank doesn't mind if they screw their customers. But clearly, politically, that's a big problem. And so the establishment of a dedicated market conduct regulator is part of the equation of ensuring that there's trust of the financial sector in society. And that's absolutely critical to the establishment of a safe and sound financial institution, and a financial institution that serves the needs of the country and the citizens. And that was the policy driver behind the Twin Peaks. In the calendar year 2017, we licensed 2 new banks. Now, we've said this before, so let me clarify this difference. In the Banks Act, there's something called Section 12, under which the banks apply for what I would call a preliminary license. It says you can set up a bank, you can have a board, you can have a CEO, you can register with the Payments Association, you can appoint your audit committee, your risk committee, but you can't yet take deposits. You can do testing on the payment system, but you can't yet operate as a bank. And then under Section 16 of the Banks Act, the bank has, so 1 year from the granting of the preliminary license, the bank has 1 year to apply for under Section 16 for a license, and then that is granted. The licensing of Discovery Bank, the full license, and of Time, or Commonwealth Bank of South Africa, took place under the period under review. We also licensed 1 cooperative bank, and that was Zikamisu Financial Services, and more recently a mutual bank called Bank Zero. And certainly that was slightly after the period under review, but was also significant. The annual report, let me run through sort of the quick highlights. Safety and soundness of the banks is absolutely primary for what the Prudential Authority does, or what the Bank Supervision Department has done in many years. We've had a huge task to implement the Twin Peaks regulatory framework. So the law is in place now, but much of the preparation has been underway for the past 5 or 6 years. For the past 5 or 6 years, we've been working towards integrating banking and insurance supervision, bringing FMI supervision into the SARB, introducing conglomerate supervision, etc. And the people you see there, with one exception, or with one addition, Unati Kamlana, who's one of the 4 heads of departments, they're the 4 heads of departments in the Prudential Authority who have been working tirelessly for the last 4 or 5 years to ensure the implementation of Twin Peaks. For us, it's a big deal. The central bank has supervised banks for 31 years, but we've never supervised insurance companies. Even though we've got 56 highly competent people from the Financial Services Board coming over to the Reserve Bank. As an institution, the central bank has had to learn about insurance, and that's been important. On financial market infrastructure, I think we're still very much in a learning period, figuring out exactly what the supervisory framework is, exactly what safety and soundness is, and how we will implement that. Ensuring appropriate entry and exit from the banking system. I guess for a long time this was a little bit of a misnomer. Before the curatorship of African Bank, there were no curatorships for 11 years, and there were no new banking licenses for 11 years. And I think it would be fair to say that the culture in the central bank was certainly, we like big banks that are well capitalized and well regulated and don't fail. In the last 4 or 5 years, we've consciously attempted to change that. one that would allow for a more dynamic banking sector, a more competitive banking sector, while still maintaining the safety and soundness of the banking sector, while still ensuring that we can manage and minimize systemic risk in the banking sector. And there have been two developments. I think one, our increasing openness to new entrants, but also technology. Technology has significantly lowered the cost of entry into the banking sector. And we do feel that we are able to increase the diversity, the dynamism and competitiveness of the sector at a lower cost for customers while still maintaining the safety and soundness of the business. The curatorship of VBS took place after the end of the calendar year, but I'll cover that in a little bit of detail later on because I think it's important. But the ongoing curatorship of African Bank, which I think is one of the success stories of the last year, is also covered. And lastly, influencing international frameworks. We are members of the Basel Committee on Bank Supervision, this hazy, secretive society that meets in the Tower of Basel that determines rules for the rest of the world. And we participate quite actively in that forum, but we're also members of the Financial Stability Board together with the Treasury. In fact, the governor chairs one of the subcommittees of the Financial Stability Board. Which one is it? SCSI, which I have to remember what it stands for now. It'll come to me. He chairs one of the subcommittees of the board. I myself sit on the Basel Committee. And we play an important role in these institutions, because of our status as a G20 member, we're the only African country to participate in these forums. And even though in theory the Basel Committee develops frameworks for the large banks and internationally active banks, inevitably these regulations affect domestic banks, and they would affect domestic banks in sort of Malawi or Djibouti for that matter, not just in Washington or New York or London or Paris. And in some ways we represent an important voice in those committees to ensure that the rules that the Basel Committee comes up with or the Financial Stability Board are appropriate for developing countries, for emerging markets, and for countries on the African continent. While globally banking is dominated by countries from the big economies, so countries such as South Africa, Brazil, China have important roles in these committees to ensure that banking regulation is fair and appropriate across the board. This is a little table that reflects the increase in the number of banks that we've had under supervision. South Africa still has a fairly dominant banking sector. If taken by assets, the largest 5 banks have 91% market share. And while that is changing, it used to be 93% a few years ago, it's still a very concentrated sector. And we're certainly hoping that more competition and more dynamism will be good for the sector while still maintaining the safety and soundness of the sector. I've mentioned this, let me skip that. Mutual banks, I mentioned Bank Zero and Zipa Kamiso, Savings and Credit Cooperative Bank. In August 2014, the Reserve Bank put African Bank under curatorship. It was a large bank in relative terms, assets of over 50 billion rand, and the curatorship has been a difficult one. It was one of the first curatorships globally, first bank resolutions globally where we used the bail-in principle. Not the first, I think the first was in Portugal a few weeks or months before that. But it was certainly one of the first resolutions of an entity where we used the bail-in principle, which is that shareholders largely lost everything, but senior and subordinated creditors lost a share of their money too. We were able to protect retail depositors fully, but wholesale senior and subordinated creditors lost. Denzel will probably know the numbers, but I think senior creditors lost about 1/3 of their money, No, 10%. 10%. And subordinated creditors lost about 1/3 of their money. Right? So we use the bail-in principle. I'm happy to say, and it's absolutely unplanned, but African Bank are releasing their results in one floor down as we speak. And from what we know from the previous financial year, it's a profitable bank. And when we put it under curatorship, I said it'll take 5 years to see whether this has been a success or not. It's been about 4 years. So far, so good. Not yet out of the woods, but so far, so good. I should point out that the Reserve Bank owns 50% of African Bank. The PIC owns 25%, and a consortium of the big banks own the other 25%. We don't intend to be owners of a bank permanently. As soon as we think that the bank is safe and sound and stable, and there is appetite in the market, we will be prepared to sell it. And I think we've also said it publicly that we would have a preference for selling it to black investors or broad-based investors to try and contribute towards the transformation of the financial sector. But that's our view as the central bank. There are, of course, 50% another 50% shareholders. Just to give you a sense of the numbers, in 2017 we breached the 5 trillion rand in assets. That's big, even by international standards. South Africa's banking assets to GDP ratio stands at about 130%, which is what I would call a Goldilocks number. It's not too small. It means that we've got a deep and sophisticated financial sector, but it's not too big in the sense that we think it limits the risk that the financial sector can pose to an economy. So if you take the UK, banking sector assets are about 4 times GDP. The most extreme examples ever recorded was Iceland at about 9 times GDP, and Malta, Cyprus or Malta, I forget. Which one had the banking problem? Malta. Yeah, at about 10 times GDP. And we know what happens when banking sector assets can get between 5 and 10 times GDP. So I think in South Africa we've got a financial sector that contributes positively to economic development, but is not as large as in some other countries, and therefore the potential systemic risk is limited. I do want to spend a minute about that number, 2.54%. That's the growth in loans and advances over the past year. That's a very small number. In a context of nominal GDP growth of about 6 or 7%, effectively, we've now had 2 or 3 or 4 years where loans and advances in the banking sector have grown slower than GDP. I think that there's several reasons for this. One is the banks are probably at the tail end of having to increase their level of capital to comply with international standards. 2 is we've had a very weak economy for the past 4 years, and that means that demand for credit has been weak. And thirdly, we still have something of the after effects of the bursting of the unsecured lending bubble that we had around 2010 to 2014. When unsecured lending was growing at phenomenal rates, it grew from 4% of banking assets to 11% of banking assets in a very short space of time. That bubble, I think, has been deflated in about as responsible a way as we possibly could have managed. But that does mean that net loans and advances have been growing slower, at a slower rate. That means it's a tough environment for the bank. Notwithstanding that, impaired advances are very low, 1.89%. The credit loss ratio, which I was trying to find, forgive me, it's around 50 to 60 basis points, which is very low by international standards. So notwithstanding a very difficult economic environment, the banks have been mature and responsible in the way in which they've extended credit, we think that that's good for the safety and soundness. On the other side of the balance sheet, the regulatory framework has forced banks to bid up for deposits, and we think that this is a healthy thing. In general, some evil concept called the net stable funding ratio, has forced banks to compete for long-term deposits, for retail deposits. And they've paid up for that, and we think that that's been positive. And we actually see positive momentum in the increase in household deposits for the first time in a long time, and that's positive for the economy. South Africa's banking sector continues to be profitable. You've got a return on equity of around 16%. And I think the fact that it's slowed since the previous year is reflective of the very weak economy. But the fact that it's 16%, whereas the global average is 8 to 12, is reflective that we still have quite a healthy and dynamic environment. South African banks are well capitalized. So part of the reason why the ROE is lower is because the total capital adequacy ratio has gone up marginally. It's a ratio. South African banks are now fully compliant with the liquidity coverage ratio, in part because of assistance from something called the CLF, the Committed Liquidity Facility, which the Reserve Bank provides. And on the credit risks side, you can see there that impaired advances as a share of total advances, all of those ratios are very low by international standards and largely what we would call under control. Of course, these are aggregate numbers. It may hide a certain degree of stress in one or two areas, in one or two sectors, but on average, the banking sector is well capitalized and sound. This is the issue that gives bankers nightmares, our AML-CFT supervision activities. We are a designated supervisory body for the banking sector, and we will become a designated supervisory body for the insurance sector quite soon. The FIC Amendment Act introduces a risk-based approach, which in one sense should lower the costs for most institutions, should allow banks to treat their customers in a risk-based way, not one size fits all. But it probably increases the complexity for our task as a supervisor to ensure that they have sensible risk-based frameworks to be able to assess customers. If a worker comes in, opens up a bank account, earns 10,000 Rand a month, there's a steady inflow, a steady outflow, it's not something that would require enhanced due diligence. But if the worker all of a sudden receives large amounts of money and transfers abroad large amounts of money, the bank would probably have to say, oh, this is no longer a low-risk customer, it's a high-risk customer. We've, in many cases, fined banks, but that is a last resort. There are many remedial steps before that we take. Let me state that this is an issue that raises costs in the banking sector unequivocally. Right? AML-CFT costs have been amongst the fastest growing costs for banks, and the compliance for AML-CFT has been amongst the most costliest reforms that have been implemented in the last 10 years. In part, we've got no choice in the matter. If you want to be part of a global financial system, then you've got to accept the rules that the global financial system imposes, and these are in part these rules. However, I'm optimistic that the AML-CFT framework that we have can contribute towards lowering organized crime and corruption and illicit financial flows. And that's a huge social good. Right? And I think that as South Africans, we shouldn't underestimate the value that the AML-CFT laws bring to our ability to fight organized crime, corruption, and illicit financial flows. It's not to say that we'll win the war against that, but I think we've got genuinely positive tools in our arsenal in that fight. One of the things that the Reserve Bank does is we often get involved in what we call illegal deposit-taking schemes, pyramid schemes, Ponzi schemes. And you can ask, why do we get involved in this? And the reason why we get involved in this is to protect the integrity of a banking license. If our most important power is to issue a banking license, and Tim Masela comes along and says, you know, give me your deposits, I'll give you a 20% a month return, and he's not a registered bank, then in some ways it breaks down the credibility, the integrity of a banking license. And so we take this extremely seriously. We, during 2017, 7 new schemes were investigated, and 9 scheme inspections were finalized. I forget the number. It's probably somewhere in the annual report. But Logan, we probably spend 100, 150 million rand a year on this. It's a large activity for the central bank. Often we get involved at the tail end once a court has declared it an illegal deposit-taking scheme. Our job is to try and recover money and pay back investors who've invested in that. TVI was probably the largest scheme that we worked on in 2017. Am I correct? Okay. Let me give a 30-second advert. I think it's up to everybody in society to tell their friends, family, and whoever else they talk to that if somebody tells you, please give me your money, I'll give you a 20% a month return, it's too good to be true. Right? You're going to be scammed. And it's absolutely critical that we raise public awareness about these issues. What have been some of the regulatory issues affecting our banking sector? I've mentioned the Twin Peaks. Mandatory audit firm rotation coming into effect in 2023. And we've been asked recently about joint audits. I should state that we like joint audits for the big banks, the systemically significant banks. We think it gives us a higher level of quality assurance, but we do accept that implementing joint audits and mandatory audit firm rotation will raise some challenges for the banking sector, and we are engaging with IRBA as a regulator, the Treasury as a policymaker, and the banks about how we can manage that triangle of objectives in some ways. Implementation of IFRS 9 has been a huge issue for the SARB. This year, any bank with the financial year that ends this year, in this calendar year, will have to implement IFRS 9. It's an accounting standard, new accounting standard for banks. It's called an expected credit loss approach. So in the past, if I've lent 100 people 100 rand each, and I've got sort of a default rate of 5%, I have to make adequate impairments. So I've got to take a number, hopefully slightly larger than 5, and I've got to impair that. Now, you've got to say, given the economic environment, do I think I would get more losses next year or less losses? Right? So based on data, the banks are expected to model this and to make a prediction about the level of losses. So for example, if the economy is slowing, a bank may have to hold more provisions than it held last year, even if its loss ratio last year was good. And the converse is true. This is complex for the banks. It requires them to have a lot of data, a lot of modeling capabilities, a lot of actuarial capabilities, and we've worked together with the banks. I'm happy to say that after a slow start, the banks are on board largely. They found it challenging 2 years ago to find the people, find the skills, develop the frameworks. They were poaching accountants from each other and from the auditing firms, but it's largely stabilized, and it's a positive story. A costly story, I should say, but a positive one. The Twin Peaks framework gives us an explicit mandate on financial stability, and the Reserve Bank is organized in a way that does that. I've mentioned the creation of the PA and the market regulator. One of the most critical aspects of the Financial Sector Regulations Act is that it forces us to cooperate with other regulators. And this is important because in order to maintain financial stability, if one regulator decides that they're going to take some measure against a large systemically significant bank, it could have a knock-on effect. That doesn't mean to say our job is to protect the banks or the insurance companies from such an investigation, but our job is to ensure that it's managed in a responsible way. Many institutions here will be supervised by more than one institution. The FSCA, the Prudential Authority, and in some cases the National Credit Regulator. And if we are not cooperating, we will trip over each other. And so it's absolutely critical for us to cooperate. So there are both formal memorandums of understanding that we've got to sign, and we've got 6 months after the introduction of the Act to sign these. But I can assure you, informally, we meet the FSCA at least every month, sometimes more regularly. We meet the National Credit Regulator at least every month, sometimes more regularly. We meet the FIC probably every 2 or 3 months. But our staff are in their offices literally weekly to enhance cooperation. I've mentioned most of these. Oh, that's a picture you probably can't see. But I guess it just gives you a flavor of the scope of the Prudential Authority. It's a scope that's larger than we used to have. So, for example, the National Payment System Department in the Reserve Bank, which plays a regulatory and policy role in the payment system, our job as the Prudential Authority is to supervise the payment system from a prudential point of view, not a market conduct point of view. And so that begins to fall our the ambit. Is there anything I haven't mentioned on this slide? Lastly, we're in the process of implementing a huge volume of change, and that's challenging for us, but it's challenging for you too. Twin Peaks is a challenge for you. On 1 July, the Insurance Act and the Prudential Standards for Insurance comes into effect. On 1 October, the Prudential Standards for Cooperative Financial Institutions comes into effect. On 1 January next year, Significant Owners comes into effect. That, in law, is somebody who owns more than 15% of a bank. We've got the right to set prudential standards and fit and proper person standards for significant owners. And then on 1 March next year, Financial Conglomerate Supervision comes into effect. So in addition to the stuff we've already implemented, it's quite a daunting pipeline going forward. And, I said I'm going to mention 1 or 2 things about VBS, even though it's after the period of reporting. In March this year, we put VBS under curatorship. VBS is a small bank. It's not a systemically significant bank. When we put it under curatorship, we were of the view that it's suffering from a severe liquidity constraint. It was unable to pay back depositors. It simply ran out of cash. And we put it under curatorship to be able to protect depositor interests. We announced on the date of curatorship that retail deposits up to 50,000 Rand will be protected. And we also announced that the curator will attempt to recover the finances. Since then, there's been a number of developments. The first development is that the curator found that the liquidity position of the bank was actually much worse than we thought at the time of curatorship. The second issue that we found was that the curator was not able to rely on the 2017 audited financial statements and withdrew the financial statements into the bank. He was of the view that the financial statements did not accurately reflect the finances of the bank. We've had to put in place very tough deposit limits. And in April, I think 13th of April, if I'm not mistaken, we instituted a forensic investigation under the chairmanship of Terry Motau, Senior Counsel, to investigate whether there's fraud in this bank. And that investigation is still underway. It is certainly our intention to continue with the curatorship and to protect depositors' interests for now. I should say that there's been lots of media reports about fraud in the bank, about alleged fraud, about commissions paid. I think it's still too early to definitively comment on these things. Once the investigator has completed his report, we will certainly, it's in our interest to make that report public. My guess is it'll probably be another 2 or 3 months before that investigation is complete. So with those introductory remarks, let me take some questions. I should stress that Faisal, Suzette, and Denzel will help answer the questions. If people don't mind, I'm going to sit down so I can write while you ask the questions.
Hi, Vernon Vessels of Bloomberg News. I just noticed that in terms of expansion projects that they were relatively low by both local and foreign banks. Could you explain that, number one, could you explain how what defines expansion in terms of the little table you had there? And why do you think that expansion by banks has been so low? I think if I can remember, it's the lowest level since 2012 on an overall level, and even worse for a local expansion, I think was the lowest level since 2009.
Hi, if people can just say their names when they ask a question, it'll help us when we answer them.
I'm Sibongile from Fin24. I just want clarity on the status of Baroda Bank since they gave indication that they were planning to exit the country. I see in the report they're listed as still a bank, a recognized bank in the country. What's their status right now?
Lindy Donnelly from the Mail and Guardian. Just in relation to the Baroda question, could you give us an update? I believe the Reserve Bank was investigating Baroda for foreign exchange infractions after a complaint from OTA. So could you just give us an update on those investigations? And then just in terms of VBS, you have said that you intend to continue on with the curatorship, but it has been some time now and we still have no plan for VBS and how the bank is going to move forward. In the case of African Bank, there was a plan within a few hours after the share price collapsed. Are you confident that this is still a bank that you can rescue? Thanks.
Is there one more? Okay, let's take that. Sorry, sir, I didn't get your name. Vernon. When you're talking about expansion, are you talking about the total loans and advances or the size
Section
of...
52 applications. Section 52 applications. Section 52 applications.
Ah, okay.
Yeah.
Okay.
Yeah.
The bulk of...
Go ahead.
The bulk of the expansions that the South African banking sector has had in recent years has been onto the African continent. And we had a steady stream of applications under Section 52 of the Banks Act to approve acquisitions or the establishment of subsidiaries on the African continent. When the oil price collapsed in 2015, and you saw significant economic strain in a large number of African countries, particularly West Africa. So for example, Nedbank owns a share in EcoBank, ETI. They made almost $1 billion loss 2 years ago. In a number of cases, the earnings of the banks on the African continent from the rest of Africa slowed down. And I think the slow expansion is partly reflective of that. It's partly cyclical. So the banking conditions have become more difficult. The economic environment became more difficult. Fortunately, many of these countries are growing again. Having said that, I think in many cases, the banks have changed their appetite for, what they would want to acquire. The truth is that African economies are not growing at 5% a year anymore as they did for over a decade. They're probably growing at 3 or 4% a year, and that will require a degree of recalibration. I think that's the main reason for the slower pace of expansion.
But just in addition, there are no specific regulatory restrictions placed on banks' expansions.
Bank of Baroda have formally informed us that they are withdrawing from South Africa, that they're in the process of closing down. We are engaged in discussions with the bank about the mechanics of that and the time frames. I can't give you a definitive answer about how long that is likely to take, but we have been officially informed by the bank that they will be closing their operations in South Africa and moving out. Lindley, on the OTA investigations, we have done an investigation into the OTA allegations, and we have given the report from the investigations over to the Hawks for further investigation. If there's any criminal, basically the Hawks and the prosecuting authorities need to see whether there's any criminal offences that were committed. The VBS plan for VBS, in one sense, I think it's a little unfair to say that in the African bank case we had a rescue plan within 24 hours and in VBS 2 months later we didn't. We had the exact same intent, right? And the intent was to save the bank. And so when this bank was put under curatorship, you've got to figure out what the problem is. Is it a liquidity problem? Is it a solvency problem? Is it fraud? Are there monies gone missing? And you've got to solve for that problem. On the day that we put the bank under curatorship, we were very confident that we would be able to save the bank, that it was largely a liquidity problem. Where we sit today, I would think it'd be fair to say that we are slightly less confident that we are able to save the bank. That's not to say that we are not doing absolutely everything in our power to try and save the bank, and that there continues to be a probability that we will be able to save the bank. I would say the probability has probably fallen since the first day of curatorship. The level of confidence is slightly lower. That's not to say that it's zero.
Deputy Governor Herman Kroll, South African Bank of Athens. An issue that you didn't touch upon, but which the banks were involved with, is the deposit insurance initiative. And my question is, what is the progress in that regard? And has there been a quantification of its impact on the South African banks? Thank you.
You guys want to add anything?
Morning. A lady from the SABC. I just wanted to understand a little bit more about the mandatory rotation that is supposed to happen with the auditors. We heard, there was issues with KPMG, but ABSA, terminated the contract with them, yet your banks like Nedbank still kept them on. In that joint venture that you guys are talking about now, would it be a requirement now for the bank to all act, similarly? If one terminates a contract with an auditor, would it be a requirement for everyone to follow suit? Thanks.
Any other questions? Okay, let me deal with those two. The deposit insurance scheme There is draft legislation in front of Parliament on both the deposit insurance scheme and the resolution bill. My sense is that it's not likely to be passed this year. My sense is that it's only likely to be passed early next year. And we committed to both. The National Treasury drives the legislative process, not ourselves, but we think these will be positive developments for the banks. It is clear that deposit insurance comes at a cost, and that cost will be borne by depositors in the end, banks, but by depositors in the end. We have attempted to introduce a funding framework that we think minimizes the cost as much as we possibly can, spreads it out over a long period. It includes the Reserve Bank providing a loan to start off the entity. And the actual details are actually in the discussion paper that was released publicly around that. I don't quite remember the number on the impact for the banks, but there will be an impact. There will be a deposit, an insurance premium that's paid for at least part of it, even though the starting position will be funded from a loan from the Reserve Bank. It's a cost, but I think there's a benefit. If we had a deposit insurance scheme, the welfare effects of something like VBS would have been much lower, right? And similarly on the African bank side, even though they didn't have large retail deposits, the welfare effects would have been much lower. And I think it will be good for promoting competition. People will be fair to say, well, I can deposit my money with any registered bank. I've got the same degree of protection. And I think that will be good for the sector. So I think that there are social benefits and competition benefits, but I fully accept that there's a cost. Ma'am, on the mandatory audit firm rotation, so IRBA has issued regulations saying that all companies, large companies, listed companies, should rotate their auditors every 10 years, starting in 2023. Right? So if Denzel is my auditor come 1 January or 1 April 2023, I've got to see, has Denzel been with me for more than 10 years as an auditor? This is not audit partner rotation. This is the firm rotation. Right? If his firm has been my auditor for more than 10 years, I will have to rotate to a different auditor. Right? That regulation has been introduced by IRBA. For large systemically important banks, we have a requirement that they have a joint auditor. This is not in law and it's not in the regulations. It's a requirement of the Registrar of Banks previously and the Prudential Authority now. We like joint audits. We think 4 pairs of eyes looking at the accounts gives us a higher degree of assurance. What we've also found is that when you have joint audits, both sets of auditors put their best people forward because they're worried about what the other would find. And so we're happy with the quality of audits that we get from joint audits. The third point I want to make is that we fully accept that both mandatory audit firm rotation and joint audits does introduce a complexity for the bank. I'll give you an example of the complexity. So let's assume that there are 4 auditors, right? I'm not saying that there are only 4 auditors, but let's just assume for a minute that there are only 4 auditors. Right? And 2 of the auditors are my joint auditors at the moment, and 1 other audit firm does significant amounts of non-audit work, consultancy work, advisory work, IT work, assurance work, whatever. When I rotate an auditor, I've got no choice but to rotate 1 for that 4th firm, so there's no competition in that process. All right? So we think that the existence of mandatory audit firm rotation and joint audits introduces a practical problem. We are discussing those issues with IRBA and with the Ministry of Finance and with the banks about how we manage that complication. It's a practical complication. We've got no problem with the principle. Right? The principle of firm rotation, I think, is a sound one. We think the principle of joint audits is a sound one. So we've got no principal problem, but there are practical implications, and we're discussing those. Section 90 of the Companies Act makes that rotation more complex, because Section 90 of the Companies Act says that you can't appoint a firm as your auditor if they've done any non-audit work for you for 5 years. Right? Our view is that that period should be reduced to 2 years. Right? So the cooling off period is 2 years. We think that will increase the practicality of mandatory audit firm rotation. Right? But at the moment, as the law stands, 5 years is a long time. Right? We have not relaxed the requirement for joint auditors. So, for example, APSA at the AGM announced that they are withdrawing one of the auditors. We will give them a reasonable period of time to appoint a second auditor. Right? And it takes a long time to appoint an auditor. In the interim period, they will have one auditor. But we will give them a reasonable period of time to appoint a second auditor. Any additions? Faisal, Suzette, Denzel?
No. Sorry, if I may just build on the previous comments you made. What about a bank like Capitec Bank, which has said they're going to stick with one auditor for now? At what point in time does the regulator need a bank to have 2 sets of auditors?
When they become a systemically significant bank. So we've got a framework called a DSIB framework, domestically significantly important bank, domestic systemically important bank, sorry. Once they've met the threshold of being a DSIB, the practice historically has been for the regulator to require them to have 2 auditors.
Okay, but where do you think Capitec is in terms of that? They don't have big depositor funds, but surely they are growing in importance as one of the sort of bigger banks. And they've said they don't want 2 auditors at this point in time, but have you had discussions with them about a second auditor?
We haven't commented publicly on the designation of any particular bank on whether they're domestically significant or not. There are other legal issues around that disclosure. We've not disclosed publicly which are the domestically significant, systemically important banks or not. And that's standard practice in terms of international practice. Because typically, DSIBs sometimes have to hold higher levels of capital. And depending on which bucket they fall in, they've got to hold higher levels of what we call Pillar 2B add-ons to their capital ratios. And those are not publicly disclosed.
Hi, it's Leon Judon from the APSA Bank. The recent introduction of the Banks Amendment Bill making provision for state-owned companies to own and operate banks and control banks. If this finds its way into law, does the Reserve Bank foresee any particular challenges in the supervision of a state-owned bank compared to the current privately owned banks?
Thanks.
Renee Benorcus, Bloomberg News. Just further on the amendment to the Banks Act, I know that there were some provisions that needed to be made in order for Post Office to go through to get its full license. I wondered where we're at with that. Do you think that'll happen this year? And then just, your report goes to December 2017. I wondered in the intervening 5 months if you fined any banks during that period.
Have we found any banks in the last 3 months?
Can I say?
Yeah.
For the administrative sanctions on AML CFD, yes, we did fine some banks, but we are unable to disclose because we haven't gone through the administrative processes. So until that process, the administrative processes have been concluded, we'll then be in a position to disclose.
Let me explain what the administrative process is. So we write to a bank, say we intend imposing a fine. You've got 30 days or thereabout to write to us, telling us why we should or shouldn't. After that 30-day period, we impose the fine. We then give them a further 30 days to appeal the fine. There's an appeal review board which is set up under the Financial Intelligence Center Act. They've got a period to appeal. And only after that period, if they've not appealed, would we publicly disclose. I should state we always publicly disclose the fine unless the law says that if we think that there's systemic implications, we can desist from publicly disclosing. We have never not publicly disclosed a fine. So as soon as the administrative process and that legal process is concluded, we will publicly disclose. On the state-owned companies owning banks, we have this anomalous situation at the moment where Post Bank is an unlicensed bank, but they take deposits, right? And they operate under exemption from the Banks Act. Itala in a similar way. They're not licensed by us. Therefore, the ability for us to supervise them is limited, right? And they take deposits, public deposits. We think it'll be a much more healthy legal situation to formalize this, to give them a banking license, so that we can formally supervise them in the way in which we would supervise any other bank, right? So we think it's a positive step that the law be amended to allow state-owned companies to own banks. At the moment, the Banks Act says that you have to be a public company to get a banking license, and the Companies Act says that there are three types of companies: a public company, I forget which the other one, and a state-owned company, and a state-owned company is not a public company. So because of that technicality, we cannot license the Post Bank. This amendment to the law will enable us to license the Post Bank, or Itala for that matter, if they apply. I should stress that if anybody applies for a banking license, we will take the same care and due diligence as for anybody else. And trust me, there's a significant amount of care and due diligence that we take when we license a bank. So I do think it'll be a positive move when such a law is introduced. It'll allow us to formalize something that already exists in one sense. I think it'll be able to put those banks on a safer footing being supervised by us rather than operate under exemption. And I can assure you that we will do absolutely everything within our legal powers to protect depositors. The Post Bank has got 7 million depositors, each who have an average of 1,000 rand in there. Right? That's 7 billion rand in deposits today. And today, there's very little legal protection for them. Right? So we think it'll be a positive move if they're licensed. But we will do our job. To the best of our ability, we will do our job. Doesn't matter who owns the bank, whether it's the state, whether it's a foreign-owned bank, whether it's a local-owned bank. We will do our job. We will apply the prudential and supervisory standards as tightly as we possibly can. And if they don't comply, we will not hesitate to take either administrative action or, in the extreme case, withdraw their license or suspend them their right to do certain business. Renee, have I answered your question too?
I wanted on the timing.
Okay. When the law is changed, in some ways, we can start the process of processing their license. We have had significant interaction with the Post Bank. They won't be starting from scratch. They did apply for us under Section 12 for a license. I don't think it's a huge leap to go from that preliminary license to a Section 16 license, but we can only process that once that application is formally in.
Morning, Mr. Naidoo and the team. I'm Clifford Nalter from Citibank. I'd just like to ask you, in terms of the last annual report, Regal Treasury Private Bank is now into the liquidation stage. It was for a number of years under curatorship. Do you foresee how much longer, I just would like to, as a matter of interest, how much longer that process will endure before it is finally liquidated? I understand there could be some complications, but it's been, under curatorship since 2001. And then my second question, just a comment, if your office could possibly make a comment of you regarding the current Competition Commission issue that they have with certain local and international banks on the foreign exchange and the manipulation. Do you have any sense of how long this will continue for? Thank you.
Are there any last questions? Then we can wrap up after this. Okay. You've asked a question that I have absolutely no idea about. Does anybody else know what's happening on the legal treasuries?
On the liquidation process and how long it will take, it's very uncertain, so we can't give you something very definitive on that. Yeah.
I will attempt to get an answer, and I will attempt to send it to you. I'm not sure where we are on legal treasury. It's one of those things that started a hell of a lot long before I joined the SARB. But we will attempt to get back to you. On the Competition Commission case, we don't have any comment to make. Denzel, do you have a sense of what the timelines are?
There's some Competition Commission hearings coming up, I think in June. That's going to come up. And it's essentially those banks that didn't go into the settlement process with the Competition Commission. So it's still a long way to go, Ben.
Okay. Thank you, ladies and gentlemen. And if there are any further questions, please don't hesitate to email us or to write to us or call, and we'll, to the best of our ability, attempt to respond. Thank you very much for coming.